Kodak is starting to break this range. Now this could also be a very explosive setup. I'm not gonna trade it, it's too thin for me. But you can clearly see the range here on the 60-minute chart, right? Building higher lows, and now it's been getting tighter and tighter, okay? You don't want to buy it on this candle here. You don't want to buy it on this, like this candle here, right? You want, you know, this was a potential setup right here. But this one failed, okay? And now, you know, it's just starting to break this range. Could be a potential setup. Now, I'm gonna pass on it. It's just way too low volume, but this is a very explosive stock, you know? You blink and it's gonna be at 15 bucks. It's that type of a stock. ADR 12.5. This thing, yeah, you know, it's super explosive. Could go. You need to buy it right, just as it starts breaking out, okay? You don't want to buy it way, you know, too much above the breakout area. You gotta be ready. That's why you build watch lists. Before the market opens, you need to have your watch list ready, okay? And you need to be ready. Like Zoom today, this was my main watch today. Or it was actually my only watch today. Let's look at the 1 minute chart without the pre-market data. Here it is. So what it did is it gapped up, it sold off on the first 1 minute candle, okay? So now it had an opening range high, okay? So I knew that high of the first candle, that was the highs of the day. So I put a order for 10,000 shares, okay? Next candle, it kept going lower, and then it suddenly reversed and went straight up. And my average is like 488, 49, 40, 48, 488, 48, okay? Very specific entry, opening range highs. I had a little bit of slippage, right? That's where you want to buy it. And it would have been fine to buy it 490, 492 also, you know, because it was still kind of early. But I wouldn't necessarily want to buy it here, right? It's all about being ready for the setups. And now Kodak is starting to move. Why I'm because that's not how it works. Connecting some random points, I don't believe in that type of. You need to. It's the overall trend. Like these undercuts and overshoots, they're normal. You want to see the overall trend. You can see a lot of these trend lines and triangles I draw. They, you know, the price moves both above and below them. But it's overall, you want these undercuts and overshoots. You want those. You want those false breakdowns and false breakouts. That's where you build setup strength. There's a lot of you know, examples, like something like Fastly, right? You know, you need to look at the overall trend, right? When I bought it here, right, I draw this trend line and this trend line and this trend line. You know, it's all about visualizing the setup. And Zoom too, right? We had several overshoots, didn't really have any breakdowns below this line. But you know, this is not how to draw trend lines. I don't believe in this type where you connect the dots and you have no overshoots. I don't believe in that. It doesn't have to be that exact. It's more about the overall trend. And NIO too, you know, I draw this trend line, I draw this trend line, you know, it has several overshoots. You know, I mean, you can do trend lines this way, but you know, where do you buy it, right? Why buy it here when you can buy it here, right? You can clearly see It's getting tighter and tighter. You want to visualize the tightness. Oh no, it's a bunch of things. Oh, Kodak is going. Nice. I hope it's not all of you buying it and piling on in this thing. No, I didn't buy Fastly near the highs. No, I bought it just as it broke out of this range here. 80. My average on Fastly is 88.75. This is where I bought it. 88.75. Where is it? Here, right here. This is where I bought it, right here. Now, had I been a bit faster, I could have bought it $1 lower. But you know, as you remember, you know, I bought it live on the stream. It was just went straight up, and I was too slow. Sometimes I'm too slow, right? And I only bought half size because I chased it. You know, I would have preferred buying it $1 lower, but it is what it is. EAT, failed breakout. This is a great looking breakout if you bought it as you should have yesterday when it broke out, you know, yesterday. Same thing with Shake Shack. It broke out yesterday. If you bought it today, you probably need to rewatch the YouTube video. You know, I mean, it's not that hard. Like, why do you buy it here? Right, when it broke out here? I don't, why, you know? Yeah, you probably bought it wrong. If you bought it today, you bought it wrong. And if you buy these things right, you won't have these problems. You get stopped out all the time. No explosive move. It had a great looking breakout yesterday. This thing looked absolutely amazing yesterday. Not a momentum leader per se. It's not the type of stock I like to trade, but this is an amazing looking breakout. I would say it's like a 4.5 star chart. 4.5 stars. Shake Shack too. Well, this is definitely not a momentum leader, but the setup was solid. A nice range, and then it built higher lows into this breakout. Got tighter and tighter. E2, you know, it had this range, and then it built higher lows into the breakout. You can clearly see it on the daily chart. It built higher lows for several days, and then it broke out. Very good setup. But yesterday there was no explosive move. I don't get it. Like, what? So there was an explosive move today? I don't really know what you're trying to... I mean, yesterday was clearly the breaker. You can clearly see this thing broke out of a range yesterday. Like, I don't know why you would buy it today. I really don't understand. You really need to review the, you know, if you bought it right yesterday, you would be at a profit. 5 and 15? Well, don't even look at the 5 and 15. Look at the 60-minute chart. And really, daily chart is all that matters. You really don't even need to use the intraday charts. If you're getting confused by the intraday charts, don't use them. Just use the daily charts. Or at best the 60-minute chart. You never need to look at a 5-minute or 15-minute or any type 1 minute, definitely not the 1 minute. Just focus on the daily charts. You can clearly see when things are starting to break ranges. And then you buy them just as they start breaking, right? Some Tesla. Ignore this. Don't look at the intraday chart. Let's look at here, okay? This is what you should be seeing, okay? Let's say it closes like this today. This needs to be one of your top 2-3 watches tomorrow. Or sorry, Monday, right? Once it starts, well, it's not an ideal setup. It had a better setup here, but yesterday. But, you know, look. As soon as it starts breaking out, that's when you buy it. This is the range, right? You can clearly see it's getting tighter, tighter and tighter. It undercut several times, right? Soon as it starts breaking out, that's when you buy it. Never, you don't even need to look at the intraday chart if it confuses you. Is the market open on? Isn't it? Is the market closed on Monday? It's closed on Monday. It's open. Columbus Day. So is it open or closed? Yes. No. Yes. Open. Okay. Damn. I wanted a day off. Okay. Whatever. Wow. JKS. What a beast. I hope this thing hits $100 next week. It's closed for David.